Good Thursday morning, Market Chameleons and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Dimitri Pargamonic. How you doing, dude?
Good morning, Will. How are you?
Sorry about that. I just dialed you from my desk. Apologize. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker-dealer. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your registered investment advisor, call your broker. That's what they're there for, to give you advice, provide you with guidance. There's a disclaimer.
All right.
And let's get started. I'm going to share my screen. If you guys have any questions, joining for the first time, you can put those questions on the live chat on YouTube. Will's watching it. He'll read it back to me. If you have questions about Market Chameleon tools, data, analytics, strategies. If you want to come on a show live, we also provide a link to Zoom. Click on that link. That takes you over to Zoom. Once you're in Zoom, there's a button, raise your hand at the bottom. Click on that button. You don't have to turn on your video camera. Once we let you in, everybody could hear you, but you can ask for a question live and direct. While we're waiting for any questions to come in, we'll start out with the pre-market report, take a look at what's trading in pre-market hours. I'll then go to look at some reports and get some insights on the markets. If a question comes in, will stop me. I'm going to take those first.
All right, perfect.
Okay. So pre-market report, these are stocks trading in pre-market hours. We have our most active stocks, biggest percentage gainers, biggest percentage decliners. Coming down here to read how many made our list. 40 stocks made our percentage gainers list, 165 on the decliners, indicating a more bearish bias at the open. Let's filter this list out to only S&P 500 stocks. We want to take out ETFs, closed-end funds, preferreds, all those other equities. We're going to remove them to focus in on the S&P 500. And to do that, I'm going to use this filter up here in ETF. Dropping down this filter gives us a list of ETFs. When you select one of these ETFs, the pre-market report will get filtered by the stocks that are holdings in that ETF. Now, let's try SPY over here, the top one. That's the S&P 500 ETF. Select that. The list below will get filtered by the stocks that are holdings in SPY, which are the S&P 500 constituents. And here we see no stocks made our percentage gainers list, 44 in decliners, indicating that we are having bearish bias at the open. Of course, yesterday, we had a Fed meeting. The Fed increased interest rates by 0.5%. They also gave some projections going forward, and it looks like they're still on the path of raising interest rates. They think that there's still more to do to bring that inflation down. They did say that there's some good signs. Maybe inflation has peaked and is starting to turn, but we're definitely way too high above their comfort level. They want a 2% inflation rate, and the latest numbers were above 7%. And I think the core CPI is still above 6%. And, they're not happy about that. Of course, they wanted a 2%. So we might still see, what are the latest projections? Like 5% or 5.25%?
Yeah.
Before we reach that peak rate. We got some ways to go.
But it's amazing because the market didn't sell off. I mean, I know it was up and sold off a little, but it didn't sell off significantly.
No, relatively. Let's take a look at SPY.
I mean, it's interesting. I see one of the stocks in the decliners is Tesla again. It's become like I mean, listen, I realize it's relative to its earnings. It's an expensive stock, but it's really, and every bit of news from Twitter that seems negative to people is affecting Tesla.
Well, how much stock did he sell at this point? He sold,
I think he
$40
sold
billion.
another 3 billion.
Yeah,
But
bringing it to-
there's so many people who have gone negative against Musk in the media, and it's just like just a really negative drumbeat about the individual who's leading that company. It pops into my head. My brother says you always bet on the jockey, not the horse.
right.
I don't know if that's the case or not, but for a long time, everyone was riding the greatness of Elon Musk, right? And now seems like it's turned a little bit, and it's the opposites in effect.
Yeah, people are taking that position off. We were looking at it yesterday from the perspective of options trades, and Tesla still makes the top of the list as far as options volume. I'm going to go to that and come back to SPY so we can take a look at how the market performed. Going into the Fed meeting, and we'll take a look at historicals for some guidance as what history shows us after the Fed meeting. But here is the options volume report, and these are all the stocks that trade options, and it is defaulted by showing the volume in option dollar terms, the notional. You could switch that to raw volume. This is the total options volume in Tesla, or we could switch it back to here, and this is the total dollar amount traded in Tesla options. And we could see Tesla yesterday, number one, top of the list, $11.8 billion worth of options traded yesterday in Tesla. And the majority of it were in the puts. Right? 1 billion in the calls, 10.65 billion in the puts. And that probably, a lot of those puts might be, already hedging some of your downside positions at this, a lot of people have long positions in Tesla, maybe hedging some of their positions. Maybe some people think that now it has more ways to go. But if we just look at the next stock down, which is Alibaba, it traded 3.7 billion. And that's a big, big difference, right? Between the first top of the list, most active options, Tesla versus Alibaba. And if we go back down to SPY, which is the market, right? So SPY, the most active ETF out there, really the market benchmark, that traded $2.2 billion worth of options. And that's just showing us how much volume and trades is concentrated in a single stock, relative to the whole market. Even, what were the Amazon, Meta here, Amazon 3.3 billion, Meta 2.2 billion, Netflix 1.2 billion, Apple not even a billion. I think you'd have to add up the top whatever 5 just to equal what's going on in Tesla. A lot of trading going on there. Big positions were established, and on the way down, it continues to trade a lot. Let's go back.
With that volatility in the puts, D, is with the trading into the put, is the volatility coming in or going up? How do we see that?
Let's take a look. The implied volatility.
Yeah.
So yesterday, the implied volatility was actually down a little bit, but right now it's in the 70th percentile. We'd consider that probably, somewhat elevated. You're already getting into that range where it's starting to get elevated relative to its history, but not very high. These implied volatilities wouldn't signal some kind of panic, right? It's still within kind of a reasonable range, considering that the stock is in a downtrend, hitting new 52-week lows almost daily, and you just had CEO sell off more shares, because this isn't his first time selling the shares. And it could be a couple of things. He's selling shares, of course. He bought Twitter, very expensive. He overpaid. He admitted he overpaid for it. He needs to raise capital. And at the same time, it could be, what I think is also playing into it, is that he has very good insights into what's happening in the economy, what's happening with the ability to raise capital, from Silicon Valley to banks, and that can play into his behavior. Is he selling stock? Is he selling the stock because of other things he's seeing, right? What he's seeing in the demand destruction, what the Fed is trying to do, what he's seeing in the cost of capital increasing, and is it getting harder to raise capital, because his businesses really rely on growth, right? The valuations are on growth and the ease of being able to access capital to fund growth. But as it's not, his businesses are not value stocks, right? Meta might at this point be a value stock. We could take a look at Meta. That probably hit such a low valuation that, let me take a look at Meta's EBITDA. Because you could see that.
Well, I think its PE dropped into the single digits when it got into the low 90s, high 80s.
Yeah, you could see it's not that much above its book value for a stock that's a technology stock.
Yeah, and you're right. It's working on things that if it hits could be big. Same thing that they consistently say about Tesla, right? It's not just the cars, it's the technology, it's the AI with the driving mechanisms, it's the batteries, it's the solar. They constantly talk about the other things going on inside, which could be true, right? But that's
it's definitely an interesting play. And here we'll take a look at where's its EBITDA yield.
The difference between the two jockeys, though, is the Facebook CEO seems to be keeping his mouth shut, right? Where Elon Musk is asking. Well, I just can't say he's asking, but he's doing things which lead to a lot of commentary via different media sources. And what he's built relied on a lot of government involvement, right? Tax benefits for the cars, all sorts of different things. And, so we'll see what happens. I would never bet against him. That's for sure.
Yeah, he's the original, just like Meta, right? The original founder still at the helm.
And that's a big deal.
It's a big deal. Here we got an EBITDA yield of 14% if we use the trailing 12 months.
I mean, listen, Musk on a positive state, he's moved mattresses into the Twitter headquarters, right? I mean, he's sleeping there, working, 24 hours a day. Well, I shouldn't say, but he's working and sleeping and trying to, develop Twitter into the application he thinks it can be, right?
Yeah.
And he's got a lot of people rooting against him, a lot of people rooting for him. And but it certainly seems to have been one of the things that maybe affected people's willingness to hold Tesla in their portfolios.
Yeah.
Who knows?
Yeah. Well, and the question is he overstretched? He's got a lot of businesses. He's got a lot of stuff going on. It's one man, one person. You start losing focus. These are legitimate questions, that people have. And it seems to me that these social media platforms are very addictive, right? Yeah. Some people get so addictive to them that they lose focus. They become, it's like that, they created them like a drug, right? Dopamine for your mind. And, some dealers might, get addicted to their own drug and, trying to get up. Maybe that's because all this, I would say right now, almost all his focus is on Twitter, right? At this point, and trying to figure out how to make Twitter this, better, bigger company. And you got to ask, well, what does that mean for Tesla, right? How do you move Tesla forward? And both of these companies right now, the social media space is under a lot of pressure because now you've got lots of things changing there that's impacting their business model with privacy laws and, with some of the vendors changing the rules like Apple and so forth. And then you have a compression on digital ads. They rely solely on digital ads, and those may not be that they could prove more volatile than other types of models.
Yeah, well, certainly
Microsoft,
during recessions, ad spending drops significantly.
yeah, and the majority of their revenues coming from digital ads. Right? I think almost all of it is coming from digital ads. There's nothing to fall back on. Right now their services are free. They depend on having free services. The reason is because their users create the content. Their users, they're the creators of the content. They need to offer it for free, and the users are the product. The customers are the institutions or organizations that buy these digital ads. And in a economy that's moving, on a downtrend, that's gonna wait. But not only that, there's more competition every year for those digital ads, right? The internet keeps expanding, and the free model, is everybody's trying to replicate it with TikTok and so forth. So there is competition for those digital ad dollars as well.
I did hear yesterday, and I don't know if this is 100% true. Maybe people can chime in, but that the U.S. government outlawed government employee phones to have TikTok on the app on their phones. I don't know if you.
Wait, so what did they do?
I guess the U.S. government outlawed TikTok app on government issued phones.
No, that's been a debate for a while.
Yeah, no, it's
with TikTok and their user data.
The previous administration threatened outlawing TikTok, right? Which personally, I don't want to see either. I think outlawing, it'd be like outlawing crypto. I just don't think it's, when it exists in the space that it is, it's hard to outlaw anything like that, and it just doesn't seem. I don't know.
I think that this space, you could tell that regulation is coming, that there's going to be new rules in place with privacy, with how this data is used, how they share this data, what data is even legal to collect, right? Like right now, they're collecting a lot of data on people, and then it's going to be, they hear everything you're saying, right? Did you ever?
Yeah, well, the things you use on your phone are mostly free, except the fact that your data is theirs, right?
That's your personal information.
Yeah. Either as a society, we have to come to grips with that, or the model is going to change, right? If you want to be paid for your data, or you don't want them to have your data, then you're going to have to pay for way more usable services on your phone.
Because we're trading off, private. There's no more privacy, right? There's no privacy when you're at home anymore, right? And that is starting to surface. And I think that as we go further, there are going to be issues with that. So far it's kind of like the trade-off people have been okay with. I think that going forward in time, people are going to have more issues with that, and that's something that they're going to have to deal with. So far they got a free ride, but if we looked at Meta just from a perspective of valuation, it does look like a pretty good, because you're talking about what a tech Silicon Valley, with billions of customers out there trading 7.5 times EBITDA. That seems pretty reasonable. But they don't have as good a model as, say, Microsoft. Let's see that.
Our favorite Chameleon analyst from Chicago just ran a fair value run on the Chameleon for Tesla.
Yeah.
And it came out to 280 a share with the preloaded settings.
So if you run the 3-year average PEs, take the average of price to sales, all those, you got it at 280, right? Let's see on this. So this is a different model, right? That's the historicals. This is a comparative model, and then this one has it overpriced. The difference is this doesn't look at the historical PEs. What it does is say, okay, if I took Tesla's revenue, all right, starting revenue, and I compared it to S&P 500, and we projected Tesla to grow at a certain pace, and we projected SPY, the market, to grow at a certain pace. So right now, we're saying that in the next 5 years, if the S&P 500 revenue grows at year over year on average 6%, which is using the recent historicals, and we give Tesla a growth rate on their revenue of 47.6%, right? And that's taken in, the historicals, whatever guidance they're giving us. If we did that, and then we gave the margins, S&P 500, their operating profit margins of 15%, and Tesla at 17%, which is their latest. If we took that information and we ran it into a model, right? Because we want to see what's better, Tesla giving these growth rates, right? Like if we're going to give these growth rates to Tesla, these assumptions, and we're going to give these growth rates to the market, and if we use those assumptions and ran them through the model, what is a better deal, right? What is a better return on your risk investment, Tesla or SPY? And remember, this is giving higher growth rate, right, to Tesla. It's giving higher margins to Tesla. And if we did what it's doing, it's running those numbers through a model and doing a earnings return parity between the two, right? It's doing an earnings growth parity, and said, based on that model, where would we price Tesla on a relative basis in the market? Because remember, you have a couple things here. You're projecting out earnings, and then you got to kind of make it relative to where other things are being priced for similar growth and so forth. And at that level, it's still overpriced.
Yeah, it's interesting. And there's an interesting discussion. I don't know if you read, but Kathy Wood purchased some Tesla yesterday.
Yeah.
And, the discussion in the chat, everything from, I guess, an analyst from Benzinga said it could go as low as $20. Chameleons are tossing around, could it get below 100? I mean, I know if you look at it versus other car companies, strictly on vehicle sales, right? It's still super expensive. Obviously, you're if you're buying the stock, you're betting on the technology and the growth long term, right? So it's an
Right.
interesting interest, and obviously higher interest rates. There are other places to put your money and just wait, right? So
Exactly.
it's an
Exactly.
interesting battle going on. But like Kathy Woods stepping in,
Mhm.
where's her money come to buy shares? I mean, all these shares that she owns have just cratered. Does she? I mean,
Yeah, I don't know if more money flows into her ETF. I'm not sure how her model works or where
because
it's
it's
coming
not a
from.
closed-end fund, right? Or is it? It's not a
I
closed-end
think
fund,
it's
right?
no, it's like an actively managed ETF, I believe. And
So more money flows
whatever.
in, she has more money to put to work. The risk to her is outflows, right?
Yeah,
Obviously.
and I think that with an actively managed ETF, I don't know what the rules are, if it's like a rules based, but she can sell one stock, buy another stock, or maybe she could sit in cash. It's almost like an ETF that's operates like a hedge fund in some ways, that it has that flexibility. But I don't know if there's like a rules based system she has to stick to, or if it's subjective. I'm not entirely sure, how that fund works. We can take a look at. Here's one of her funds, ARKK. All right, just take a look at their holdings. So here's one of the funds, and here's Tesla over here. You can see that 7% of this ETF. Zoom is 9%. That, she's got Roku, Block. Some of these are kind of Coinbase here. So you got to go and read the prospectus. What drives the decision to say buy more Tesla or more of this? I'm sure there's explanations. There's a prospectus. I didn't, read all these ETFs prospectus. But we can
Well, they're
see
the
here.
future of the economy, D. That's why.
Huh?
They're the future of the economy. In 5 years, they'll each be.
Tesla and yeah.
That's what she says.
Oh,
I
okay.
don't know if that's the truth or not, but it's. I just remember during the internet boom, there were people saying the same thing, and she, comes across as a brilliant individual, right?
For sure.
Every time I
Yes.
listen to her, I'm like, Jesus, these things, but right now it's cash on hand and burn rate, right? How long can you
Yeah.
survive to like Tesla, is making money though. And I mentioned in the chat, if EV sales slow, which Rob was saying, he read that it went from 6 months to 2 weeks wait time. So
Right.
if EV sales slow and the next earnings cycle, they're, miss, it could be bad, right?
Yeah. And you also have a weaker market, right? You have a weaker market, you have a weaker economy, cost of capital going up, and these tech companies are very sensitive to cost of capital and interest rates going up, especially in their valuations. As cost of capital goes up, you're talking about how much are their future cash flows worth now. It's always the present value will be worth less. So yeah, look, Kathy Wood is buying it, and she's a smart individual, of course, and she is doing analysis, I'm sure, behind her decisions. But Elon is even closer to the company, and he sold it, right?
Yeah.
So
Well,
you have somebody closer to the data.
that's in a trust. Supposedly that's in a trust, and just following whatever the rules are of the trust. Like every 6 months they sell more share, whatever. Who knows?
Okay.
But certainly it doesn't look good to the market. And there's a debate going on when it's cheap enough to buy, right? Like everyone in the discussion probably has a price that they would buy Tesla.
Yeah.
No one today said they'd pay Tesla buy Tesla. Well, I shouldn't say that. I would have to read. There's a lot flowing through, but do you buy Tesla at 152?
Yeah.
I'm
Yeah.
not sure.
So-
Maybe
Yeah, I'm not-
maybe start nibbling.
Yeah.
But the same thing could be said when Meta was at 88. You know, not everyone was
Yeah.
jumping in to buy it at 88, right?
Yeah. Yeah, exactly.
It's when things look the worst, it's the hardest time to buy. But
Yeah.
anyways, we're 2 minutes into the opening. Great job, Dean. Thanks, buddy.
All right. Thanks everyone for joining. Stay safe out there. Have a